Morning all. How are you doing? Sorry, I was having some technical difficulties this morning. All sorts of things going on and nothing was working. The microphone didn't work. The stream started on a completely different stream, not the Friday morning stream. My MT4 terminal crashed and wouldn't open. And I'm here. How are you all doing? Morning, Marco. Morning, Wishek. Morning, Danny. Morning, Paul. Mumo. Marco. Chris. Monkey. Joe. Morning. How are we all doing? It's Friday. So we'll kick off with the usual stuff, news, etc. Closed out a fair bit of profit yesterday on, what did I close yesterday? Aussie US and Swiss yen. So Aussie US yesterday, another straight in, straight out on the position trader account. So I haven't got my pen ready. Go away. I don't want to buy your pen. Be one of those days today. So going that on Wednesday, end of session, and straight down into propulsion, which was target. So that was a nice easy trade. And the Swiss yen I got out of yesterday. I posted this one on Discord. I don't think I posted the other one. Entry from last week, straight into propulsion, done. So yeah, nice day yesterday. Everything else is just sort of flip-flopping around at the minute. Aussie, New Zealand, been in this for days now, weeks. It's just not going anywhere since I got into it. We're looking for a continuation. And it's just taken ages. We've had it's same market as usual. You get a move and a sit around, then a move, and then a sit around. It is coming down nicely at the moment, so I'm kind of hoping this previous high here, which is the monthly, is holding at the moment. They don't want to, there's no interest in going above last month's high, so hopefully they'll come down into the propulsion gap from there, but we'll see. Euro CAD, that's not moving. Stuck totally sideways on this thing. It's just not going anywhere. I've got two positions on, but it's just not going anywhere. We're stuck. Euro pound, same. Been stuck all week down here, not moving. I can't get another position on. It won't go far enough. There's my next long there. Under those lows. It won't go far enough to get me that position on. But it won't go up either. So my average is 125 ADR. It's just not moving. Well, we haven't had an ADR out of it all week. Useless. And we've also got pound US dollar, which is pretty similar. Shorts on that. First entry was here, which I took a breakout, unusually. Second entry scaling, and we're sitting here. So next short is going to be up at the weekly high, which will be ADR today if it gets there. Average will come up, and then I'll look to exit in that propulsion gap retest. Stuff's just not moving at the minute. We are very, very sideways. So markets are open. Fantastic day yesterday for opening range breakout. Beautiful couple of weeks, basically. So, yeah, really good results on ORBs at the moment. There's a lot of choppiness, but the clean breaks are beautiful. So really nice profits. I got out of this DAX way too early yesterday. This massive propulsion gap retest happened yesterday, and I saw the speed that was coming down, so I thought I'd get out the second half of it. Then it exploded, so unfortunate. But NASDAQ, that NASDAQ was a stop out yesterday. Dow, beautiful break. So we had an initial stop out on the first entry, 30-minute range break, worked beautifully. Again, I got out on a trailing stop on that, but all profit. S&P, there was no trade. I think it was just the NASDAQ and the Dow yesterday. FTSE yesterday was pretty good as well, I think. Yeah, so FTSE yesterday, two stop outs. So attempted long on the 5-minute ORB, failed. Attempted short on the 10-minute or 15-minute ORB, failed. 30-minute ORB, beautiful. Straight up to propulsion gap fill, which was my first TP. and I took the second TP in the final propulsion gap before the highs of yesterday, or the previous day, which it shot around at and didn't get any further. So that exit was pretty good, but it did finally break. So good day yesterday, good money. So this morning, no 5-minute ORB on the DAX. 5-minute range is okay on the FTSE, and I'm long. So first, God, look at that. Stop. Look at that for a stop. How did that not trigger me? That's a first, isn't it? Broker not honouring a loss. I'll take it. So yeah, long at the moment. So big, strong move up. So we had this pre-market move this morning and flag break. So this is the second batch of buyers, which obviously have at the open immediately rebought. Same with the DAX. Strong push, propulsion ad. Good wicks going in on that as well. So range is a little bit too small. On the 5, the 10-minute range is going to be too small as well. So looks like we will be relying on a 15-minute break on the DAX if it decides to put some more volume in. Come back to that in a minute. Let's just have a quick look at where we're going today. All-time highs, I presume. Okay, so we're out of the highs at the moment. So yeah, we'll see if we can continue to break. Not a lot we can do with that one. DAX, I think we're in the same boat, aren't we? Pretty much. So targets on the DAX, obviously we've got a weekly high to deal with. Obviously there's no trades on at the moment. So once that range is in, we've got roughly 95 points to the upside, which is just under 20% of ADR, which is 110. So I think I will probably look to take a partial at those highs, but we'll see. We need to get a trade on first. Okay, so 10-minute range is in. Obviously, no trade again on the DAX. Morning, Mark. Morning, Ace. Right, so let's look at the news. So this morning, we've had some pre-market movement. Not quite sure what caused that pre-market move this morning, but we had a bit of a spike up before the open. Not quite sure what's caused this big flurry to come in this morning, but something happened there. 7 o'clock. Vilroy comments Barclays forecast. Not quite sure really why that would have spiked. That was Ukraine trilateral meeting to be held at 7:45 in Turkey, Russia. I don't know. But yeah, so there was no real reason for that move this morning, I don't think. We've had the New Zealand inflation expectations coming out. Inflation to rise, no shock. But obviously not a lot of movement off the back of that. If we look at the ADR dash today, nothing's hit ADR so far. A few weeklies have gone in. Morning, Virginia. So yeah, a few weeklies gone in, but nothing on the ADRs this morning. So no real overnight movement. RSI dashboard flat as well. Euro yen is the only real extension at the moment on the 4 hour. So that's really nicely extended on the 4 hour. Like a lovely long there. Swiss yen like. They're going to pay me to hold that as well. Little bit. We're up at the highs. Big propulsion targets to the downside, but we've got all of this from the intervention. I don't think we're going to weaken all the way back up to there. So I'd be more inclined to look at it moving down. So I don't really fancy that, but it might not. So if you're going to take that RSI extension on the euro yen, obviously you've got roughly 52, 2 ADR to the upside, which is plenty of room there. So if we're going to keep market structure, which is obviously low, high, higher low, higher high, this is your higher low, propulsion gap fill. So your higher high is going to go in just above there. So you've got plenty of room. If we are going to pull back and go short and retest that area, you should be able to get at least an ADR out of it. So there's plenty of room for a long on that. You probably had some market structure breaks on the lower time frame. Not quite yet, actually. So big strong move down. So it is starting to try and move up. So when you get that reversal alert on the 15, that's probably the best time to get in. Confirm that we've got that break of structure. Bulls have taken control. And then go for a run up to the highs. Loads of room on it. Looks good. Like it. Right. News-wise today, we've got Schlegel speaking at 12 o'clock. University of Michigan is the only news this afternoon, which is scheduled. So that's 30 minutes after the New York Open. So we've got some potential movement coming on that today. UOM is very, very hit and miss. Sometimes it really, really moves the market. Sometimes it doesn't. But it is an end of week news event. So quite often you find the banks and institutions use it as a liquidity tool to just drive tons of volume into the market. So it quite often does spike a lot. Typically, it won't change direction. So it's more of a sentiment index, as it suggests. But it is usually in line with sentiment. Therefore, when you get these numbers, it tends to move. So it's one of those hit and miss news events, basically. So there is potential for a lot of movement on the US this afternoon. I've really got low exposure on at the minute. So currently, I've got a little bit of exposure long on the US. Main exposure is Aussie New Zealand, and I'm hedged on Aussie New Zealand. So I've got longs New Zealand, shorts Australian dollar. So it doesn't matter what happens with the commodity markets. One of those will pay out, one of them won't. So it's just a case of trying to get a little bit more exposure on at the moment. I'm just struggling to find anything that I can get into any decent size on, because all that's happening at the moment is the market is just either sideways or slow grinding, or it's in a complete range, which is just single in, single out, single in, single out type price action. So it's difficult to get any size on. Size is where the money is. Single trades are lovely. There's no heat taken, but they don't make a lot of money. So I want to try and get a little bit more exposure on, but I'm trying really hard, which is difficult, to stick to these 7 pairs at the moment, just to keep my overall exposure tight and the correlation, my exposure uncorrelated. But there's nothing really that I'm interested in at the minute. We're bang in the middle of nowhere here. Can't really do anything with that. Obviously, I've got Aussie New Zealand on. I've got the Swiss. I had the Swiss yen on, which I've taken off. That actually looks like a really good long as well. Tempted to take that back up again. Exactly the same as before. Look, shorted it there, 1 ADR. Longed it, 1 ADR. Shorted it, 1 ADR. Out of propulsion. There's a chance that this is going to come back down and test this for a higher low. But we have had a structure break. It's just that retest there today. If that is your higher low going in, this is exactly where you want to get in. So what I'm going to do, I'm going to stick a buy stop on it. Just above there. it will probably get dragged down by the EA running on the VPS and trigger me earlier, but I'm not actually that bothered. So I'm just going to go long again on the Swiss yen. I think there's a little bit more downside on this potentially. So if I get triggered somewhere around here, that obviously is an ADR. So that will be roughly 90 pips, which is around about 3/4 of an ADR. So when the first entry goes in, if it is going to come and retest that low or test the weekly low for a double bottom, that'll be my second entry on it. So I'll be scaled in for a push back up into these propulsion gaps here. So that reversal alert there may get retested to the upside. So we'll see what happens. But I'm going to get in that Swiss yen. Euro Swiss, I'm not interested in. Euro pound, I'm already in. Euro CAD, I'm already in short. And pound US dollar, I'm already in short. But, you know, this is, I can't get anywhere near second entry on this thing. Third entry on this thing. It's just not going anywhere at all. So there we go. If there's any FX pairs you want to look at, let me know. There's nothing else to look at ADR-wise. There's nothing else to look at RSI-wise. I might go through the weeklies, but I think you've missed all of those. Let's just have a quick look at what's going on. So it looks like I'm going to stop out on the FTSE. No trade on the DAX. Just too close to the highs. So the range here on the DAX is right. Look, so we got 4,900 on the 15-minute range. Minimum is 41.59. So in theory, that should have been a decent range to trade. But as you can see, the price action here didn't work. So the rule is when this candle opens, the logic is when this candle opens, the open of the candle needs to be below the high of the previous candle so that we don't get a limit order placed. And as you can see, although the range size is correct, the market gapped up. So the open of that candle was above the 15-minute range. So therefore, it can't place a stop order. It can only place a limit order. So there's no trade. Unfortunately, it looks like that's going to be the one that goes. But got to have rules in automated trading. So that didn't trigger this morning, unfortunately. But looks like it's going. But if that goes, hopefully the FTSE will go with it. And the money will be on the FTSE this morning. Market's definitely rallying. So we got very strong market this morning, but not strong directional bias, but not, as you can see by the gap there, not a massive amount of liquidity this morning. We've got a gap down there as well. So whenever you get these gaps, it means there's low volume. So what the market has to do is there's usually a one tick spread in the market. When you've got high volume, you've got loads of orders sitting at that price point, loads of orders sitting at that price point. So whenever you want to buy, you are buying one tick above. Whenever you want to sell, you are selling one tick below. When you've got low volume, if there's not enough orders here to get filled, so say someone wants to buy 100 and there's only 50 there, they will have to remove all 50 of those. So they will take all 50 of those, reducing it to needing to buy 50. And then they will tick up to the next level to buy 50 from that next level, which means you get a gap. So you completely skip an entire price level in the ladder. And that's what these gaps are, which basically indicates low volume. So the volume of buyers is way higher than the volume of sellers, which means that you can't fulfill your orders at every price point. And the same here, look, we've gapped down. So it means this is low volume movement, which is indicative of potential slippage, which means this isn't necessarily the price direction. It just means there's an imbalance of buyers and sellers this morning. So if that carries on, obviously, this will keep going, but there's no interest in selling at the minute. So they're having to reach a lot further to find their sales orders, which means you get more movement, but not volume. So same here, look, gappy market, gap there. So got a gap, got gaps everywhere this morning. It's really low volume. Not brilliant trading conditions, but if it goes, it goes. So I'm going to go through these weeklies. I I think probably they've all been missed, but I'll go through them anyway. If there's anything specific you want to look at, obviously let me know. But Aussie dollar CAD, we had a weekly range. Let me just stick the week in there. So that was Monday. So obviously the weekly range hit that 150. We looked at it on Monday afternoon because we were pretty much already up there at 150 ADR, AWR rather. So we looked at obviously entry opportunities on that. Wednesday, when we looked at it in the Monday, Tuesday, Wednesday, Thursday. It's not the right day, is it? That's Monday. So yeah, we looked at it on Wednesday, didn't we? We looked at it on the member stream on Wednesday as a short, and obviously beautiful, played out lovely. So that was a lovely AWR. Aussie dollar Swiss, same thing. So we've got the gap fill, which I spoke about on Wednesday as well. The gap is done. So that's all done and dusted. That was your entry up here out of that propulsion gap. So beautiful AWR there for the Aussie dollar Swiss. That was only 100% though. Aussie dollar yen. Again, AWR to the upside. That was 290. That was 211. So this is an AWR to the downside here. So 211, wasn't it? So, sorry, 214. Yeah, so that was shy of the weekly range. So this is an AWR to the downside. So this last sort of 24 hours, 48 hours of downward movement straight into this propulsion gap. There's your buy signal come out. This is a lovely long now. Look at this Aussie yen. So there's your reversal alert. Yeah. And this is the propulsion gap caused by the reversal. There's your retest add. So that is absolutely spot on right now for an entry. So there's your retest. There's your W pattern. Higher high, higher low. So target would be that propulsion gap there, which is 175 ADR. Loads of movement on that. Morning, Franco. So you've had a 15-minute reverse alert on it. You've also had a 30 and an hourly. The 4-hour hasn't moved far enough to get one on yet. So yeah, beautiful on all time frames. So that's a lovely weekly reversal entry to the downside. Aussie yen, and that's 125% of its weekly range already exceeded. It is Friday. So, you know, we might sit around, but we have got Michigan. Michigan will move the US. The US will move the yen. So there's a good chance that will work out. There's loads of others. Oh, I've broken my dashboard. Aussie US already in that one. Already got out of that one. So that was a weekly from the upside. So that was your weekly range hit. I got in on the weekly range, which obviously was worked out beautifully. They're all good this week, I think. CAD Swiss, lovely. So there's your weekly range to the upside, beautiful downward movement. CAD Yen, same thing. Actually, CAD Yen is the same as the Aussie Yen. So this is an AWR to the downside. How much is that? 236. There we go. So this here, double bottom rejection at weekly level. Really good looking long opportunity on the CAD Yen. That's really holding nicely as well. We are making lower lows and lower highs though still. Yeah, only just, but that's almost a double bottom. You've got lower highs going in. Yeah, so when that reversal alert hits there, you've got a double bottom W pattern reversal. Bang, straight up into that 125, 150 ADR. So wait for a reversal alert. 15-minute, same. 15-minute and the hourly are going to be the same reversal alert. Look, pretty much. It's 104,277, and that's 104,285. So doesn't matter whether you take that on M15 or on the hourly. Great opportunity. CAD Yen. So that's a good looking bounce to the upside. That's also a weekly level. That is your 3-week high. There's your 3-week low, your 3-week high. Rejected there, broke it through. Yeah, so it's a decent level we've traded at, and then we retested it again. We've retested it again and again and again. So buyers basically that moved this move here to make that new high are supporting here, which means that we're going to get a high, sorry, a low, high, higher low, higher high, higher low, off we go. Good looking long, CAD yen. And I'm taking the Swiss yen, so it's all the same pretty much. Euro CAD. Already in short on that one. So that was a weekly hit to the downside, which was obviously played out. So that's probably a weekly hit back to the upside, isn't it? Look, 212, yeah. So actually, was that a downward hit? No, it wasn't. Right, so this is a weekly hit to the upside. So there's your reversal and your retest going in. I'm already short on this, obviously, out of that propulsion gap fill here. So yeah, looks good. Coming down into these propulsion gaps to the downside. Euro yen, Euro New Zealand, and Euro US. Yeah, downside hits. So all long opportunities. Euro yen to the downside. So that's weekly range done. Euro New Zealand. That was an upside hit. You've missed that. You couldn't get into that today. God, look at the speed of that. New Zealand dollar rallying like nuts. Look. So yeah, I mean, your entry was this morning during the Asian session on the hourly. Couldn't get into it really. Euro US, unless you're using the EA. So Euro US dollar, really ugly. That wasn't a very nice one at all. Working out, sort of. You got your pound US dollar. That's also an extension. Again, already in that one myself. So this was the news, obviously, of the tariffs being removed on China. That was your pullback on it, way bigger than the actual move itself. So that was your weekly reversal in there for a downward move. So it doesn't matter which way you traded this week. If you from the start of the week, we've gone that far. It's not moved. It's moved a hell of a lot. It's moved, obviously, its entire weekly range, but it hasn't gone anywhere, has it? So New Zealand dollar CAD. Absolute whipsaw mess. 132 on 117. So that is a hit to the upside. And then you've had a hit to the downside. So this one's triggered twice this week. Weekly reversal up there. And you've just had the weekly reversal this morning on it. New Zealand dollar all over the place at the moment. So you had two entries on that. Both worked out. New Zealand dollar Swiss. Again, weekly hit to the downside, already working out. New Zealand dollar yen, same thing as the rest of the yens. Beautiful long entry. Came off the weekly lows very, very nicely. So that's your double bottom. That's last week's low there. So we hit that propulsion gap, which is the propulsion break. Not a great propulsion gap because it didn't actually break that high, but it got supported multiple times. They kept buying it. We got back to it. They've rebought it again. So look for it to come up into that propulsion area up there. Although we got that big old gap to the downside to worry about. And US dollar Swiss. So that was 154 upside hit. Same thing, isn't it? Upside hit. So your entire weekly range pretty much done in that one candle when Trump removed the tariffs. We've reverted. You had a long opportunity there. You know, RSI extension is doing pretty much the same thing, but you're double bottoming at the moment, look, but the gap fill's not done. So I would wait for that to come down and do that gap fill. You're probably going to get an RSI extension on it as well then. So then long it out of there. But lots of opportunity this week on the weeklies, but this, you know, it's just because the market's range bound at the moment. It's just very erratic, isn't it? Right, stopped out on the FTSE. DAX long on the 30-minute range. I don't really like the look of that trade at all. What a nightmare. Look at that propulsion test. It's really, really slow market today. I mean, it's moving a lot, but it's slow, isn't it? So, nothing to do with that. It's just Fortunate. So yeah, it took me out to the pit, and then it's come out propulsion. Look, but if you look where we've gone, there, that's your 5 minute open. We haven't actually broken it. Look, we're all inside bars basically. Apart from that wick, we are completely inside bar on the 5 minute range, contracting into just a mess in it. Utter mess this morning. So long on the DAX. What are we down? 229. $355. Half past. So I'm going to assume that we're going to break the highs today. We're going to run for the highs. So I'm going to have a go at a break of the high, go for an all-time high, which will give me a partial close, which will basically pay for this morning. Pay for the FTSE loss. And then have a look at the New York session because it's a bit... I hate taking trades when we're that extended, but it's gappy. So, you know, this could well just continue for the session for the next foreseeable, but taking a trade on a very big extension, the world and their wife will be shorting that on a pullback. So my stop loss is here, which is basically above that propulsion gap. So everything in my body is telling me not to take this trade, but I'm going to let the EAs run it because we are flagging on the FTSE. So it might help. They might help each other along this morning. We'll see. Marco, I need your advice. No, Lee, I need your advice. I've just recently joined your group and I love the fact of scaling in and no stop loss. I also appreciate the fact that you do free live room. I have a question. Always getting a bit confused in the room as you are switching from one methodology to another methodology fluently, i.e. from ORB to ADR reversals, etc. As I like no stop losses, I assume I should focus on RSI and ADR reversals. Yeah. You have a fixed schedule when you discuss the various methodologies. No, because I don't really need to. Everything you need to know is on the website. So as long as you've done the bootcamp, bootcamp is basically position trading. So if you've done the bootcamp, there's no point in me going over the bootcamp constantly because it's all there. It's slightly different what I do now to what's in the bootcamp because I use the position trader EA instead of the market reversal alerts EA, but that's really the only main difference. But you need diversification. So position trading is a long-term strategy. So position trading works by waiting for market movement, which can be frustrating. So you're going to get weeks, a little bit like this week, where you're going to sit there and you're not going to bank anything. So it's highly consistent, but you basically sit in drawdown a lot. That's the whole point of position trading. So it's a long-term swing strategy. So it's exactly the same as the banks and institutions do. In fact, what we're doing with position trading is we are trading the bank and institutional movement. So it's a little bit difficult at the moment to demonstrate very easily on a chart because we've got the Trump moves in there, which is just an anomaly. But obviously what we're doing is we are trading the bank and institutional swings. So when the banks have put a large move in, they will take profit on that, which is what swing trading is. So rather than trying what traditionally people tend to want to do is try and pick the top and the bottom of the swing, we just get in and wait for the swing to work. So swings always happen. So market structure is present in all instruments over time. Again, you can't really look at any of this stuff at the minute because so if you ignore everything from Trump's tariffs and look at normal market structure, we got leg down, pullback, profit take, leg up, pullback, profit take, leg down, push up, profit take, new leg up, pull back, profit take, push down, pull up, profit take, down, up, down, up. This is all the market ever does. This is swings. People who are swing traders try to pick that and get that. Yeah, what we're doing is going, maybe it's here, maybe it's here, maybe it's here, maybe it's here. When it happens, we make money. Yeah, so it's a long-term swing trading strategy, exactly the same as all swing trading strategies anyone will ever teach you, except we use DCA to get in and out of the market the same way as the banks and institutions do. Banks and institutions don't use stop losses. If they did, they would hemorrhage cash, which is why everybody in retail trading makes no money, because they're all trying to use a stop loss and pick the high and pick the low. No one on the planet can do that because you're not in control of the high or the low. It's random every time. So if you're trying to shoot something that moves at random, as anybody that's done archery or any shooting will tell you, pretty much impossible. You've got to be pretty lucky. So to get out of the luck, we scale in and we just wait for it to happen. Yeah. So our edge is time. When the market goes one direction, it will go in a direction for a period of time before they take profit on the leg they've just created. We have no way of telling what that is, but we will just do it. So it's a long-term strategy. So you've got to use very low risk, which means your rewards will be very low. Anything from 5 to 15% a month. Coupling that with a high risk, low probability strategy like opening range breakout helps you make constant intraday money. So with this strategy, as you can see, I'm banking every day, but it's high risk because I am reliant on explosive movement. If the market goes into a period of uncertainty, this won't make money. But the position trading strategy, because the market is doing that, will make money. Yeah. So you need diversification. So I'm not flicking from strategy to strategy. I've got multiple strategies working which are profitable. Some of them will make money at some times, others will make money at other times. Sometimes they'll both make money at the same time. Sometimes they'll both lose money at the same time, but that's trading. So you've just got to have diversification. But everything I do is on the website. So if you want to know about the opening range breakout strategy, go to the opening range breakout EA and it will explain the strategy and explain the EA and how the EA works when my website loads. So everything's on there. If you want to know about the stock index hedge strategy, again, that is a brilliant strategy. Stock index hedge this month has made 10.5%. Again, it's an ORB strategy, very much the same. But as you can see, DAX didn't take a trade today. FTSE, it did take a trade and it hasn't stopped out. Why? Because it doesn't use a stop loss, because it's a hedge strategy. So again, this strategy, ticking along, beautiful profit, making money. But this strategy is different to this strategy, which is different to this strategy. Yeah, you trade what works. So there's no right or wrong, which is why I go through. You know, we looked at the ADRs this morning. There aren't any. We looked at the average weekly ranges. They all played out. It doesn't matter which of these you've taken this week. Every single one of them, 100% strike rate. Doesn't work that way every week, does it? We have lots of weekly range hits which just don't work out. They turn into position trades which last for days or weeks or months in some cases. RSI extensions, sometimes they work, sometimes they don't. Beautiful RSI extension there, perfect. Beautiful RSI extension there, perfect. One there, worked, 100% strike rate. But we'll have weeks where every single one of them will fail. And those are the ones where we're getting into 6 or 7 trades within our positions. You have to sit them out, which is why we use tiny risk. Tiny risk makes tiny reward, but it doesn't lose you any money because our job is not to get it right. And this is the difference between position trading and ORB trading. So if you're trading a stop loss based strategy, you've got to focus on getting it right or having a loss recovery system to recoup those losses. You haven't got a high enough strike rate and you haven't got a loss recovery system, you're going to find it very difficult to make money on anything to do with trading with a stop loss. Position trading doesn't matter, does it? So I've been in this Aussie New Zealand since the 25th of April and I'm still in it. What have I lost? Nothing. I've made money. So we had a move there, which I profited from. I added that trade back on again and it's gone into drawdown. So I added another one, and we're just sitting there. But my average price is half an ADR away. Market moves to ADR at least once a week on virtually every instrument. So if it moves that way, I get in with another one and move my price up. If it moves down, job done. But what am I not doing? Trying to be clever, trying to use any kind of strategy that is accurate, trying to make everyone think I'm the best thing since sliced bread and you need to sign up to my £5,000 trading course. I don't get it right most of the time. 90% of the time, I'm totally wrong. But I don't lose money because I don't use an order to lose me money. I wait for the market to make me right. The market will always prove you right. If you bought here and then Trump did that with the tariffs, yeah, most people hemorrhaged a load of money. Intelligent people would have bought more of it, moved their price to a better level to give them an exit on their position. That's what banks do. Yeah, banks don't go, oh crap, it's gone down, we better get out and lose $25,000. They go, it's gone down, let's move our price and wait for the price to come back up again. And if it doesn't come back up again, we'll make it go back up again. And that's the advantage the banks and institutions have over us. They have market makers. If they want the price today to get to here, they will get the price there because they have the power to drive orders into the market to manipulate the price to that level. We don't. But if we know what position they're in, because it's gone down, they are ready to take profit on a move, we can do the same thing as them. So all we're doing is we're riding their waves, but it's completely random. Yeah. So everybody else is going. Somebody contacted me about currency strength this week, the weekend, for this. And they said one thing to me which really stuck. And it was basically what you do is you do this, and they explain the strategy to me. I know the strategy inside out. I know the guy, Bernard, who made the EA, who created this thing. Yeah. When it gets there and there, you do this because it has to do that. And that was the word that stuck with me. And I picked him up on it. I said, it doesn't have to do anything. It will do what the banks want it to do. You are saying the market has to do that because this line's gone up and this line's gone down. That has to happen. No, it doesn't. That's absolute rubbish. You're trying to pick the top and bottom of a move that hasn't got control. This market is made up of stations. There's a station, there's a station, there's a station, there's a station, there's a station. You're going to get on at one of those stations and it's a train. It runs on tracks. It's either going to go to that station or it's going to go to that station. You have no control. When you're on that train, you don't know whether it's going north or south. Your job is to ride the direction it's going in until it gets to that station. When it gets to that station, it is then going to do either that or that. You have no control. If it does that, you have to get on again at the next station. When it's gone so far, it will get to the end of the line because there is nobody else wanting to get on the train, and the banks and institutions will not be able to continue the move. Therefore, they will do one of two things: accumulate it or profit take it. So you either get market structure or a flag. Go and look at any chart. Tell me that something else has happened. That's all that happens. It's all this thing does. And that's all position trading is. It's measuring moves, which you can measure with RSI, ADR, AWR, and scale in and scale out of those moves, because that's all that ever happens. No one has ever been able to show me a chart where it doesn't happen. So, but because we are not accurate traders as position traders, we are swinging, we are using market swings to profit, we can't guarantee an income. And this is the problem. Everybody in trading on YouTube that is selling you something is selling you something on a consistently profitable income. This is not it. This is consistently profitable, but it's not regular. This is more regular because the market does the same thing every day pretty much. It will do one of three things on the stock indices. The stock indices will either do that, they will do that, or they will do that. Yeah. So you'll have a trend day up, a trend day down, or a rotation day. You can get days that look like that sometimes, where you will try to trade up there, fail and trade down there. This strategy, ORB, is reliant on, at the open, the market doing one of three things. One of them doesn't make us money. Two of them do. There's an edge. That's all that is. but it's letting the edge play out. So all trading is mathematics. Literally, it's just maths. Yeah, it's statistical analysis and mathematics put together, applying risk to random price movement. There's no one on the planet that can tell you where the DAX is going today. Yeah, we can tell you that when propulsion gaps get filled, they often reverse. And we can tell you that when propulsion gaps get tested, it often bounces. But right now, there's a 50-50 probability of it either bouncing or invalidating and going to there. I don't know where it's going. You don't know where it's going. The banks don't know where it's going. It's going where the market flow of orders is taking it. How can you possibly formulate a strategy around random price action that is generated second by second, tick by tick? You can't. So you ride it. The difficulty that people have in making money is letting it ride. Yeah. So when this breaks, look at my trade yesterday on the Dow. Prime example. Totally wrong. Oh, no, not the Dow. The DAX. Yeah, totally wrong. I got out there. Yeah, because there was a 50-50 probability of that propulsion gap was going to hold and we were going to go for a new low, or they were going to run that propulsion gap. I had a 50-50 choice. This is the station I got on at. This is the station I got off at. If I'd have stayed on the train, I'd have gone to that station. It eventually went up to that station. So where are the stations to the downside now? It's going to go down there at some point. Yeah, when? Today, tomorrow, this week, next week? Can't tell. This is where everybody gets stuck. You're trying, you think your job in this industry is to predict the future. It's not. Your job is to analyze price movement and formulate a plan to extract money from price movement. It will do the same things all the time, over and over and over again. Your job is to identify what it does over and over again and formulate a way of extracting money out of that movement. It's not to get the low and the high of the movement correct. Yeah, all these systems you see out there that have logos like that, sniper entries, ICT stuff, absolute bollocks. No one on this planet makes money out of ICT concepts. People can teach it, people can say they do, but they're not using it. They're using their brain. It's not ICT concepts. You know, all the stuff that he does is the same as everybody else, isn't it? This thing here is not a fair value gap. It's called a wide range bar. It was invented 20 years before YouTube. But he renamed it. Now all of a sudden everybody's trading ICT concepts. You're not trading ICT concepts. You're trading the same thing the market's done for 200 years. Banks push it in one direction and take profit on the move. They go with large orders to move it. This is just showing you where the large orders are. But you don't know when it's going to get to them or how. New Zealand dollar is going mental at the moment. Huge moves on New Zealand dollar. ADRs. So, you know, it's a perfect example. Yeah. That's where it's headed. Look at all the filled in ones. Yeah. But my point is, you don't know when it's going to do that. When it's going to get there at some point. It could be this week. It won't be today. It could be Tuesday, Wednesday next week. It could be in 3 weeks' time. So if you think it's going there, your plan is to buy it now. But if it goes down, don't just take a loss, because what you've now got to do is try and get there again. And if that doesn't work, you'll take a loss, and then you'll try and get there again because you're convinced it's going there, because your strategy says it is. I'm just using this as an example, but whatever your strategy is, it's telling you that something should be happening. When it doesn't happen, your psychology gets hit, which makes you cross, which makes you double your exposure, double your leverage, double your risk, whatever it does, which makes you lose twice as much, which makes you twice as cross. And you go in this cycle which goes down and down and down. You place an order and it doesn't work out, and then you place another order and move your price to a better level. Psychologically, you're improving your position. It's easier to get out. You're not as far away from where you entered your price. And if it carries on doing that, your target remains the same. So what's happening is you're putting more risk on. You've got a larger position with the probability of making 3 times as much if your plan works out. But if you can't hold it, just go to the last place that it moved from and take your money off there. But what are you not doing? Losing and losing and losing and losing and losing because you placed an order in the market to say, get me out and take all my money away. But this is a totally different approach and a totally different strategy. So if you just do this, it has its pitfalls in that you are staying in drawdown all the time. I'm never not in drawdown because that's my account's job is to risk money. What is risk? Drawdown. So I'm always going to be in here because I've always got risk. Here is short-term risk. I was just looking at the Dow. I was thinking that was the FTSE. Dow's gone. I was expecting the FTSE to have gone, but it didn't. This is a totally different approach. So this is using stop losses, but because I'm using a stop loss, I'm going to get stopped out regularly. So if this is going to happen, it's going to reduce my strike rate. If my strike rate goes down, I have to try and recoup my losses in some way, which means that I slightly increase my risk when I get a loss, which means that my next trade has less distance to travel. This is a very, very quick buck strategy, but it's very high risk because this time frame, which is the one that everybody wants to trade on, is random algorithmic price action caused by bank and institutional movement, which is unpredictable. Yeah, because look how many targets you've got here, potentially to the downside now. There's tons of different things that can happen. Millions of things that can happen. On a higher time frame, everything becomes clear, which is why we trade position trading strategies on hourly and 4 hourly time frames, because we're swinging the market. So you need to see a slower movement, which goes over weeks. Yeah, you know, prove it to yourself. Don't listen to what I say. Go on a chart. Don't ignore Trump because this is obviously different, but it's not different. You know. Look at it, measure it. It's 50% retracement. It's Fibonacci. Everything's Fibonacci. Everything's maths. Everything is scientifically done in banks and institutions. Everything is an equation. Yeah. You're talking about the biggest accountancy practice on the planet, a bank, right? What do? Maths. When this market moves, should it move in maths equations or not? Obviously. So all that happens is, and this is why Fibonacci works, when there is a movement of X%, if they are going to make a profit on it, they need to remove X%. So what is X% of X%? It's a fraction. I can't type this morning because I'm using a mouse. That's an A. It's a fraction. That's a really fractal way of writing fraction. It will always pull back a percentage. Fibonacci ratios work because bank and institutional order flow works in fractions. 23.8, 38, 50, 68. They're all fractions of movement. You're always going to find you're going to get a fractal movement on price. Yeah, and this is what we do. If we get the first one wrong and what we're expecting the fractal pullback to be is incorrect, we take another trade and wait for the next fractal pullback. If that's wrong, we take another trade and we wait for the next fractal pullback. There will be one. Because if there isn't, it means the banks are not making a profit. What do banks do? What's their only job? Profit. Their job is to use your money to make money. So therefore, you have to have a move. Think about yourself and your trades. When you sell something up here and it goes down, what do you want to do? Bank it. How do you bank it? If you've sold it, you have to buy it back. That's all the banks are doing. Every time they sell like crap, if they want to get out of that position, they have to buy like crap. And it's vice versa. If you've bought a load of stock, you've got to sell the stock to make money. All we're doing, we're riding waves. Short-term waves, obviously, are the same. So you get a propulsion gap. If that propulsion move caused by the banks and institutions is still, the sentiment is still there, i.e. the desire, need is still there to buy German stocks this morning, when the market pulls back, they sell a portion of their positions. They will buy more at a different price, wait for the market to move up. When they're in profit, they will sell a portion of their stocks. They will then buy some more stocks and they will sell some more stocks. Market structure. Propulsion gaps. They're all the same thing. It's bank orders. So banks are buying here, so they will keep buying. As long as there's an opportunity for them to buy at a price that, and there's people willing to sell, they will keep buying because the positions here are in profit. If they can buy more and move it up further, these positions are even more profitable. They've now got more profitable positions. They'll push it up. When it pulls back, if there's people that are willing to sell it up here and they've got a large stock, they will buy more, which means that they make more money. These then make more money. These make even more money. This is why you get the climbing up the stairs and falling down the elevator shaft pattern, because when they want to sell the stock, the index, the FX pair, commodity, whatever they're selling, they need to do it fast, because this, every time the market moves down, gets smaller. So when you see large, strong movements, again, I can't find anything that really is going to make sense at the moment because of what Trump's been up to. But you climb the stairs. You hear me say it a lot. You climb the stairs, right? This isn't a bad example. So you climb the stairs and you fall down the elevator shaft. So that move there, that profit take move, took 2 weeks. The buying cycle took 7-8 weeks. So it took them 8 weeks to buy it. It took them 2 weeks to get rid of it because panic sets in. Because the guys that bought down here had so much money on. As soon as their P&L started dropping, they sold like crazy. When they sell like crazy, the market moves down. That entices sellers into the market, which adds more pressure, which makes the market speed up, which is why the sellers are always coming down faster than the buyers. But all this is observation and scientific research into, or mathematical research into, what's happened in the past. But you can go back as long as you like. It does the same thing constantly. Yen pairs are a bad example because they've been trending like loonies, but but everything moves in waves. You don't. Everyone can see what that's done. You don't need me to put a fib on it to show you what it's done. That's a 23 retracement, often known as a flag break. So if you sold it on that flag break and it didn't work out, you added here and it didn't work out. So you added here. And then what happened was that leg that you entered on pulled back by 50%. If you entered on that leg, it pulled back by 50%. If you entered on that leg, it pulled back by 50%. If you entered on that leg, it pulled back by 38%, then 61.8, and then it completely retraced itself. If you bought that leg, it pulled back by 50%. That leg pulled back by 50%. That leg, haven't seen it, but it will pull back by 50%. Go forward. Yeah. Just repeating patterns. It's all trading is. But you'll never get it right. You'll never get the entry right. You'll never get the exit right. Your job is not to gather that trade from there to there. Your job is to identify that that trade is underway, market structure reversals, and grab that out the middle. And then try and grab that. And if it doesn't work out, grab that bit of it at some point when it does pull back. But this is a long-term strategy. So, this is why I flick between strategies, because you can't have one strategy that works all the time because the market doesn't do the same thing all the time. It's constantly evolving, constantly changing. We didn't have Trump saying to Europe, by the way, we're not going to fund Ukraine anymore. Oh, crap, let's sell all of our bonds because we need to generate a load of cash. That move there was caused by bank and institutional panic buying. Basically, they sold. Europe opened up their bond market and sold shed loads of bonds to fund the military. So what happened after that move? Pulled back by 50%. What happened there? Pulled back by 68%. That was an A-shaped recovery, which is a 100% retracement. Yeah. Never going to do anything different. No one can convince me ever on something else. You get the odd anomaly, which is what we call a squeeze, and you can't do anything about those. But that is it. That's what it does. There you go. So, Mark, I've just covered pretty much the entire boot camp in, 25 minutes. Do I swing trade with margin? Yeah. You can't trade without margin. I fully get your thoughts. I've read the book BWILC. It looks like you might have read this as well. Nope, never heard of that. BWILC. I'm racking my brains. I can't think of what that one is. I'm going to Google it. If this comes up with something nasty. Don't know what that is. BWILC. Oh, it's on Forex Factory. What's that then? I will be BWILC style. I'll explain later. Go on then, please do. I've never heard that term before. Bird watching in lion country. Oh, okay. I don't know what that means. I don't know what that means. Sorry. Bird watching in lion country. Not sure what that means. You're going to have to explain that one, Marco. Hence, I like your room. I'm just trying to figure out which twos is best for me. You're never going to figure out what's best for you until you do it, basically. So this is it doesn't matter what I teach, what I tell you. It's all about your trading style. Yeah, so basically, it doesn't matter what I teach you, what I tell you. You will do what you're going to do. So I can tell you till you're blue in the face that something's going to happen, and you will disagree with me. When what I say is going to happen, I will say I was right, you were wrong. When what you say is going to happen happens, I will be wrong and you will be right. The odds are 50-50. Yeah. So I can show you something and I can tell you something doesn't work or something does work, but you've got to do it to prove it to yourself that it either does or doesn't suit you as a trader. Every person on the planet is different. Some people cannot trade this strategy because it drives them mad. Some people cannot trade the stock index hedge strategy because it drives them mad. Some people can't do position trading because they think it's pure gambling and it drives them mad. You've got to try everything. If something clicks with you and that click makes you money, that is the strategy for you. The strategy is going to be one of three because there are only three that exist on the planet. There are three strategies. First one is called a breakout strategy. Yeah. Breakouts turn into the second strategy, which is called a trend strategy. The third strategy is called a mean reversion strategy. That's it. There's three. So pick one or ideally all three of those and trade them. The time frame that works for you will be the time frame that works for you. You've got to try them all. If you trade the 5-minute chart and you suddenly start making really good money, that's your time frame. If you've tried the 5-minute chart and you can constantly overload and you overtrade and you lose all the time, that's not your time frame. Switch up to H1, try it on there. Try exactly the same strategy on the hourly time frame. See if that suits you. If you work 9 to 5, you can't trade any time frame below 4 hours because you can't look at the charts. So you are a 4-hour swing trader. Or if you can't be bothered to do that and you literally only get 10 minutes a day when you wake up scoffing your breakfast to look at charts, you're a day trader. You can only trade on daily charts. You've got to try them all because I can't tell you what the best thing for you is. For me, scalping price action on 5-minute time frames, I'm really good at it some days, and other days I'm really bad at it. What I'm really bad at is controlling my emotions. So I don't do it because I'm rubbish at it. But what I am good at is statistical analysis, and I've discovered variations on the open that work for me, which is what I'm trading here and what I trade here. So I trade these. But I still get involved in the trades and make emotional decisions, which are either right or wrong. But this is what I have settled on because this is what works for me. Position trading is my, I say bread and butter. It's my main strategy that gives me consistent yearly returns. The yearly returns vary. In the last 2 years, the yearly returns have been down on the previous 4. That doesn't mean necessarily there's anything wrong with the strategy. It means the market conditions are wrong because the market only has 3 conditions. It's either range bound, which it spends 80% of its time in. breaking out and failing, or breaking out and working, which is why I say there's only 3 strategies. You're either mean reverting, you are mean reverting, you are trending. And all of those start with what? A range breakout, which either succeeds or fails. So if a range breakout fails, it will mean revert. If a range is in place, it is mean reverting. If it trends, it mean reverts on its way to its trend location, which is the next place it's going to find balance and mean reversion. So I am a mean reversion trader most of the time, because 80% of the time the market does that. So if you want to make money trading, you need to do what the market does the most, because if the market does that the most, you're going to make money that much of the time. If you're a trend trader only, which is roughly a 30% strike rate, you will only get 30% of your trades right. So if you've got the psychology as a trader to lose 70% of the time and keep going, be my guest. That's not me. You've got to try it. You won't know until you've done it. People, this is what you do. You do courses. You know, it's covered in the bootcamp. The very first part of the bootcamp, I talk about myself for the first 20 minutes. And my journey has been spending thousands on courses. Yeah. And what have I learned? The market goes up and down. That's it. I don't know anything else. It goes up and down. So what I decided to do was go up and down with it. Simple as that. You've got to take out of the equation the fact that you as a human being have this urge in your natural behavior to want to be right. None of us want to be wrong. You do an exam, you don't want to be wrong. You pick a horse in a race, you don't want to be wrong. Whatever you do in life, you want to be right, don't you? This thing will never let you do that. Yeah. Some people get 60, 70% strike rates. Those people are incredibly disciplined 1%ers. The vast majority of us can make money doing this, but you're not going to do it being a 1%er. Yeah. If you play football, right, you probably don't play football in the Premiership, but neither does anybody in Divisions 1 down to grassroots. Yeah. 1% of them make a load of money. The rest of them don't. Yeah. But the rest of them still play football. Yeah. That's where I see myself. I'm not a 1%er. I'm a football player. I play this market and I know how to extract money out of it, but I'm not upper echelon. Everybody that's trying to sell you crap on YouTube is pretending that they are upper echelon. They're not. They're lucky half the time. This is a great example today. Look, am I bothered? No. Look at my P&L. Loss after loss. Well, it's not too bad this week, but you know, you're going to lose. But knowing these are coming because your statistical analysis has told you they're coming is what this is all about. Proving a strategy to yourself is the way it works. This has got 2 things it's going to do now. Either the buyers here that bought up are going to buy it again, or the sellers that sold here are going to sell it again. So it's either going to break that or it's going to break that. 100% guaranteed. I can guarantee you with 100% certainty, if you come back in the live room this afternoon and we look at the FTSE, I can guarantee you we will either be up here or we will be down there with 100% certainty. But that's all I know. My job is to apply risk to that 50-50 shot. And if the risk and reward ratio exceeds, if the reward ratio exceeds the risk ratio, and on those 50-50s, I can get 50% of those right, money. That's it. That's all you got. That's trading. What would you recommend the best EA to try out? Well, of mine, try them all. If you go on the website, try them all out. You know, if you just go to the demo downloads and trials. If download all of my stuff, you can download demos of. But if you're going to download the demo, go and watch the video about the EA so you know what it does. That's the most important thing. Watch the video, understand what the strategy is, understand what the EA does, then backtest it in the backtester. That doesn't cost you a penny. If you want to do a 7-day trial, sign up for a 7-day trial and then you can live trade with it. But I only started these trials in the last couple of months. And, you know, a lot of people are taking them, but the 7-day trial is not going to tell you anything more than downloading a demo and doing it in the strategy tester. If you stick the EA in the strategy tester, you'll get a lot more information of how it works and how it performs with different settings running in the strategy tester for 2 hours than you will 7-day trialing it. Because in those 7 days, right, like today, you're going to be sitting here going, oh, it stopped out. And if this pushes up now and stops out, yeah, and then this one comes down and stops out and it takes a short and stops out, you'll go, this is absolute crap. That's 1 day out of 365 this year. Yeah, stick it in the back tester. Do a back test for the last 3 to 6 months. Watch what it does. Watch how it recovers losses. Watch how it gets your balance from a negative back to a positive. Yeah, you get much more out of the tester, the strategy tester, than you do out of live trading, because that's how you prove strategy edge in the tester. You don't do it live. If you do it live, you're going to make decisions. If you do it in the tester, you can't make decisions. The EA will just play the edge out. Not looking great today, is it? It's going to be one of those days today where we just flip-flop around. Do you trade the 4-hour chart? I trade whatever chart. Yeah, I mean, I do. So 4-hour RSI extensions on the 4-hour. That's all I do on the 4-hour chart. So all I do on the 4-hour chart is I monitor the 4-hour RSI. Yeah. So looking for buys. So there's a great example of a position tradelet. There was a signal in there to go long, out of propulsion, didn't work. So it pushed up, but not far enough. Unlikely you would have taken profit there. And then it slammed back down again. Yeah. So there's an entry there, an average there, an exit there, profit. This is the 5-minute chart, sorry. But anyway, it doesn't matter if that was a 4-hour or 5. This is the thing as well. Doesn't matter what time frame you're on. The reason I thought I was on a 4-hour because I was looking at my dashboard on the 4-hour and I moved to the euro yen, assuming I was on the 4-hour, but I'm not. So 4-hour RSI extension. But the market's a fractal. If I hide this here, you're probably going to be able to tell anyway. But if I hide that and then do this, what time frame are we on? What time frame are we on now? What time frame are we on now? That's obvious. That's obvious. But you see what I mean? This is all a time frame is a artificial construction of price analysis over time. It has absolutely nothing to do with anything apart from speed of movement, speed of analysis. Okay, so the trades you take here on this time frame are the same as the trades you take on this time frame. Yeah, this is a 15-minute chart. That was a 4-hour chart. There's lots of other charts, time frames in between, but the market does exactly the same thing on all of them. 61.8 retracements, 50% retracements, 38 retracements. It moves in large orders, which the bank tests over and over again. So every time you get a big bank order, they add more size to the order, as long as the demand is there. Yeah, add more size as long as the demand is there. When the demand runs out, you break that level and you head to the next area of orders. And if it's pushed down, you use that area of orders to push the market down to that area where it will try and bounce out. If it can bounce out, it will. Where will it bounce to? If it bounces out of here, there. 100%. It's coming up there. Because that's all the market ever does, isn't it? This is why I have this indicator on the chart. Yeah. You get the anomalies where you've got large fundamental shifts in markets, which tend to not play out anywhere near as much, because there is a fundamental reason for the buyers to buy, and there's absolutely no reason to go below that level, because now we are buying the euro yen. Why? Because we had strong euro coming in, or we had weak yen movement coming in, because a fundamental shifted the market sentiment in the opposite direction. So it's unlikely they'll break that. But at some point today, Lagarde might come out and say, we've decided we're going to drop the interest rates by 0.75 instead of 0.5 this year. Damn right, we'll blow that. We'll blow straight through that, and we'll go right through the bottom. We'll come out that monthly low and we'll be down here at some point in the next month, because there's a shift in sentiment. That shift in sentiment will cause a large move, which the market will not be able to retrace into, and it will push down and cause a propulsion gap, which will not get tested. All this you will find out as you go, because you'll see it happening over and over and over and over again. The best way to do that is to go back in time. Just go back and look what happens. Backtester. Strategy tester is the most underused part of this platform. All trading platforms have a strategy tester. MT4, MT5, TradingView, whatever you're using. The strategy tester is the most important part. The bit where you trade is irrelevant, because this is just a 50-50 opportunity. But when you're backtesting, you can prove to yourself that something happens all the time by watching months, weeks, and years fly past. This is why I developed the Zone Trader EA, for people to, I haven't got it on here, but to practice support resistance in the backtester, because you can practice months. If you can make money over months in the backtester, you can make money in months in the future. But you need to prove to yourself that it works. That's what people can't be asked to do. People just want to basically find the Holy Grail. It doesn't exist, does it? If it existed, I'd be a millionaire. I wouldn't be here right now. If I had the Holy Grail, I wouldn't be here talking to you. I'd be sitting on a beach, because I'd have built an automation system that means I don't need to touch the charts or watch the charts or follow news or do my job. I wish. That's watching in Lion Country. Oh, Franco, you've gone. Bye-bye. Electrician, good name. Let me guess. What do you do for a living? Was it possible to do any updates for the SIH? What do you mean by updates? Nice, got a FTSE short and a DAX long on now, thinking the FTSE actually will be the winner. One of them will, hopefully. Not sure. So yeah, either they're going to resell here, in which case then we're potentially looking at this area to the downside, or the buyers today, of which there are obviously quite a few, are adding, and we're going to break that high again. Very wide market. Wide markets are hard to trade, because you'll always get stopped out. These are the worst types of markets for most traders, because you've got so much wide movement. The stop losses have to be wide to survive these markets, and you don't do that, do you? Most people. This strategy included, yeah. I mean, it's got an algorithm based on ADR. So if it's going to whip around by 20% of ADR all day, it's going to get stopped out all day. There's nothing you can do about it. Well, there is, obviously, you can change it, but what to? Do you still planning remastering the Bootcamp? Yes. I have got a plan to do that, but it's not going to be the Bootcamp as in the position trading Bootcamp. What I would like to do is a general trading Bootcamp, which covers everything. So covers everything from price action, brokers, banking, institutional movement, how the banks work, all the different types of, the three main types of strategy. It will cover risk reward based trading. It will cover position based trading, dollar cost averaging, yeah, just a general everything, kind of memory dump, if you like, which is what I'd like to do, but it's a hell of a lot of work. So it would probably be something I'd want to charge for, but not, not 30 quid, 40 quid type thing, not give me $2,000 and I'll sell it to 50 people type thing. But I'd like to do it in a way that is kind of a mentorship thing like this, like the members group that we've got at the moment. But the problem with the members group I'm finding is I've got a lot of people contacting me saying they can't sign up on YouTube. So a lot of people want to join as members, but memberships are restricted in their countries, which I didn't realize. I thought YouTube was YouTube, but a lot of people can't. I think the problem is a lot of people can't attach a payment method to YouTube, which means they can't sign up for membership. So I was originally planning to sort of deliver it all through here, but that's not going to work. Then I looked at delivering it through Discord. Discord is banned in multiple countries now, I didn't know, and so is Telegram. So trying to find something that everybody can access is proving tricky. So my idea was to put it on the website and have a streaming system on the website, probably Microsoft Teams or Slack or something like that, that I can deliver the course through, record it, and then have live sessions done that way, which is kind of what I used to do when years and years and years ago, about 5 or 6 years ago, I had a private members. It wasn't actually private; it was open, but it was all done via the other one. Can't remember what it was. But yeah, that's what I'd like to do. But it's kind of I don't want to do it wrong, if you see what I mean. I kind of want to do it once and I want to do it right. So I didn't realize like people in South Africa, they can't do the YouTube stuff. I've got so many people in South Africa that contact me all the time. They love the market reversal alerts indicator because they're all ICTers. But they can't join the members streams. Strategy testing and development is something that's a massive part of this job. There's no courses out there really on it. So I want to incorporate a week or so of this is how you do testing. And we've got all of that in the member streams in here. So, all this stuff back here, strategy development series, all that lot, which is what? 1, 2, 3, 4, 5, 6, 7, 8, 9 hours of robustness testing, optimization, system parameter permutation testing, all these, the stuff that is the only important thing in trading, which is, can I create an edge? That all needs to be in there as well. But if you look at that 9 hours worth and 5 videos there, then you put on top of that the bootcamp and all the other content that I've got in the members area here, which is quite a lot of this is what I would probably deliver in the course. I mean, this is probably what it is really. But if you add up the times of all of these videos, yeah, you're looking at a good month of solid learning 8 hours a day. That's what it takes. So how do you deliver that? Because people haven't got the time to spend 8 hours a day learning. I mean, some people have if they're unemployed, obviously, but learning everything you need to know. And then you've got to pick all this apart and go, right, this is what I'm going to do. And that's where the mentorship side comes in, which I think is the most valuable part, which is what I've always found the most valuable part. Whenever I've done, there's only 2 courses I've done ever in my life that have made a difference, and both of them I had one-on-one mentors. And the reason they worked was because I had mentorship, not because of the course material. You can learn everything on YouTube for free. There's nothing out there you can't learn on YouTube, or you can't ask AI. Yeah, but having someone clip you around the back of the head and go, you didn't listen to that, that's where you learn. So when I do something and I go, this is the trade I'm going to take, that person goes, why would you do that? Well, because of this. And you go, but what about that? Oh, I forgot about that. Those mistakes immediately get ironed out. So that's where you have the real benefit, I think, not watching courses. Like I say, you can read 1,000 books and you can become an expert in price action. But can you trade? Yeah. If you know everything there is to know about price action, does that help you with the fact that price action fails 50% of the time? No. You can learn everything you want about psychology. Does that make you able to change your psychology and reprogram your psychology? No. But you become an absolute expert in it and you can teach other people. But it's the actual doing. And if you can't do it, there will be another route to a solution that someone can point you in the direction of. But you're not going to get that from a video. A video can't interact with you. So that's what I'd love to deliver. But I'm fine that what I've found when I've been trying to do this for months, I've been talking in the member stream for ages about redoing the bootcamp, but it's how do you deliver it? Because if I was to do, say, for example, 3 2-hour sessions a week with mentoring, we're going to be here for 3 months before we've got through all the content. So I could put all that into video format, which I've pretty much got in here, I guess. But it's not structured in the right way. But then how do you deliver the mentoring part? Because someone will ask a question which is covered in one of the videos they haven't watched yet. So you've got to go through stages. So I'm just struggling with the actual deliverable side of it. Money is irrelevant. Doesn't matter. I'm going to have to charge for something like that because it's going to take up a lot of my time and there's a lot of resources are going to have to go into it. But it's not something, I'm not the sort of person that's going to go, here goes a £500 a month course. I've been there, done that. You don't learn anything from that. You're better off paying 30 quid a month or 40 quid a month and then dipping in and out because you might get into 2 weeks of it and go, don't like it. There's no point in spending 500 quid on to find out that 2 weeks into it you don't like it. Well, it's what everyone else does, isn't it? And it doesn't work. That's why everyone system hops. 3 times the charm. Yeah. I stuck around for a deep listen up boy session. Real talk. You're still here, Franco. Now you're asleep, probably, aren't you? Wish I had a member stream every day. Yeah, but that's the thing, Vitaly. I tried to do that. I started off, obviously, on Tuesdays and Thursdays. Most of the members' feedback was it's too much. This is the thing. These streams that I do, I find it, as you know, because I was on at 8, now it's 9:30. I find it very hard to shut up. When I'm talking about something complicated, it needs to be a long session. If I do 2 of these streams and people are at work and they can't attend the streams, they've got 3 hours worth of video watching to do. By the time they've watched that 3 hours of video, they are ready. They've already missed the next session. So they're in the back foot. So people's feedback was that 2 a week is too much of that length. So I thought I'll try and cut them down, but you can't. There's no video on the members stream here that's less than an hour long. Because you can't cover anything in less than an hour in this industry. It's too everything in this is too complicated. Yeah. Price action is very simple. Reading price action, understanding why and how the markets move, 1 hour and 21. What I want to do is that, right? So if you watch that video, you never need to watch anything about price action ever again. That explains everything there is to know. But there will be 1,000 permutations of it you're going to come across. That's where the mentorship comes in. It's like, I've got this 3-bar reversal that I've just seen, but it doesn't quite look right because that wick's too high. Is it a 3-bar reversal? Might be. If it goes down, it's a beautiful 3-bar reversal. If it goes back up, it's not. Are you going to take the trade? Yeah, it's hammering all this stuff home. It's like, it doesn't matter, does it? It's all random. I would learn a lot about your ORB strategy, watching you make decisions as the trade is playing out. Yeah, but that's what I do in stream all the time, don't I? I explain all the time what I'm doing. At the moment, this DAX is going sideways, doing absolutely nothing. But what you will learn is what my decision is. This is the difference. Yesterday, look at my decision yesterday. Right? My decision yesterday, that was TP1. Yeah. So that was just a 2R. Perfect. That played out nicely. Target on the rest of it was here. Okay, 1 ADR. I took the second part of that trade off there. And the reason I took that part off there was because of this propulsion gap, which they sold out of. We hit, we sold out of. We then sold out of very fast. So we did a 50% retracement very quickly on that leg. Now, what I've just explained to you, everyone's going, but why didn't you just leave it going? Because it was obviously a pullback for a long. It could have been a pullback for a long, which it was, or it could have been a complete reversal for a retest of the lows. It was one of them. But I made the decision there because I wanted that result. It was the wrong decision to make. So all you're learning is that I make right and wrong decisions. It's not the right decision or the wrong decision. It is a decision. It's right or wrong dependent on what the market does. If the market had done that yesterday, it would have been the right decision. Because the market did that, it was the wrong decision. At that point in time, I couldn't see any of this. So it doesn't help you knowing that I made the wrong decision, because I didn't know it was the wrong decision because I wouldn't have made it. So the second plan, if it had broken up above those highs, I would have taken it off there, because we had 3 whacking great propulsion gaps there and a high from yesterday. And that would have been another $1,000. I would have taken it off there, guaranteed, regardless. But was it the right decision? No, it was the wrong decision. This doesn't help you. Doing it yourself teaches you whether or not you hold long enough or don't hold long enough to make your P&L green. Your decision-making process will help you. My decision-making process will show you there's a 50-50 chance of something happening. That's all I'm ever going to show you. Right now, I'm looking at this as being very extended, hitting resistance, not being able to get through it, and 3 whacking great propulsion targets to the downside that we have hit a previous sell order at and got stuck at. I am thinking more down than up. If I close this now, I can guarantee you it will do that. But if I don't close this now, I can guarantee you it will do that. But I don't know what it's going to do. I can't make a decision, but the edge is that if we've made 2 losses today in the New York session, our risk will be increased, and I just need a 2R this afternoon to recoup all the losses. The edge is there. I know that because I've been doing it for a long time. But you don't know that because you haven't been doing it for a long time. So you need to just do it. Whether I make a decision now or not isn't going to affect your future. It's going to affect my P&L today. And it's either going to be a positive or negative thing to do. Looking at the FTSE right now, I'm looking at this going, excellent, the sellers are holding. But I'm looking at it going, damn, the buyers are holding. I don't know what's going to happen next. Either the sellers are not going to hold or they are going to hold. So what's the decision I should make? I can walk away right now with a $166 loss, walk away on a $500 morning negative, and in the afternoon have one trade work out on a breakout and pay for that in seconds. Or I can just let this all play out today. The worst case scenario today is that my P&L by the New York Open will be sitting somewhere around the $950 negative mark. That's my worst case scenario outcome so far today. I've accepted that. Because I need a 2R this afternoon on one instrument to get that back, because the risk will have gone up to about 450 by then. But also, I like the fact that I'm hedged, because technically, most of the time, the indices go in line with each other because of sector purchases. Therefore, if this goes long, the DAX will probably go, which means the DAX will go into profit as that one stops out. So the DAX I would rely on this morning to move twice as far as the stop out on that. And that will get me back to probably 300 negative, because this one, by the time it gets to there, will have lost another 300. So I'll be 650 down. So I'd need that to move up by $300. So I could cut half of today's loss off and have a crack at this afternoon. that's my thought process. But my thing that's missing, you'll notice from my thought process, is I haven't got a bloody clue where the market's going. And that's the important part that everybody needs to get. And this is why I think it's better to teach people not to try and predict the future, is to teach people you can't predict the future and that you only have risk. It's going to do that. That's it. Everybody right now who is an ICT trader is in a quandary, right? Because they're looking at fair value gaps now, right? And they don't know what to do. Yeah, I know what to do. I'm letting my edge play out. I don't want a decision-making process here because there's two parties at play and I don't know which one's going to win. Yeah, but what ICT people are trying to do is predict the future based on the past. You can't do that. You can see what's happened in the past over and over again. I know there's sellers here and I know there's buyers there, but sometimes they win and sometimes they lose. Look at this chart. It's clear as day. Sometimes they win, sometimes they lose. Sellers, buyers. Yeah, they lost. The sellers lost that time. They won that time, they won that time. What's your strike rate? 66%. Sellers, they won that time, they won that time, they lost that time. What do you do next? Just that. It's maths, stats, statistics. You just need to figure out a plan that gets you in and gets you out. You need buttons to press. That's it. You know, this is what the buttons are for. On the Position Trader EA, the buttons are there so that you can take trades. This morning I took a trade on, did I get into it? Yeah, Swiss yen. There we go. I'm long the Swiss yen. I'm $14 in drawdown on it. Yeah, so I took a long on the Swiss yen. On that reversal alert. Yeah, it's wrong. Don't care. What's going to happen next? It's either going to push down to here, double bottom, which is where my next entry goes in, because it's going to test these two propulsion gaps, or it's not. It's going to come up and try and retest those highs. It'll either do that or that. Guaranteed. What do I do? I plan to get out there. I plan to get in there. If I get in there, I move my price. I wait for it to go up because it hasn't done a pullback on that leg, so it will at some point. If that doesn't work, I've got support coming up here, which hopefully, if it gets all the way down to there, will be nicely extended on RSI as well, which gives us another signal to go long. If that doesn't work out, it will come down and test the monthly highs. That monthly high has been retested 3 times. So that's a good point. And this is all within 200% of the average daily range. You can do this in 2 days, or it could do it in 2 weeks. I don't know. But what I do know is the market will go up and it will come down because that's what the market does. So if it goes down, I'll keep buying it until it goes up. You can't do that with this strategy, obviously. People have tried. I have tried. I've tried running position trading on the 5-minute time frame many times, and some weeks you absolutely kill it. You can double an account in a week, position trading 5-minute charts. This last week, in fact, the last 2 weeks, really, if you were position trading M5 time frame for the last 2 weeks, you would have absolutely killed it. Yeah, because it's just done nothing but beautiful big swings. Not so much on the end, but on pretty much everything. That, yeah, buy it, buy it, buy it, buy it. Excellent. Sell it, sell it, sell it, sell it. Excellent. Buy it, buy it, buy it, buy it. Excellent. Sell it, sell it, sell it, sell it. Excellent. Buy it, buy it, buy it, buy it. Excellent. Sell it, sell it, sell it, sell it, sell it, sell it. Excellent. Can't lose. Yeah. If you scale 100% of your account over 2 ADR in the last week, you'd have made about 300 or 400% return. But it won't last forever. That will die. Don't do that. Test it if you want to try that, but it will break. When people talk about stop hunts, what do you understand them to be? Price moving beyond a high. Stop runs and stop hunts were created by Steve Mauro, stolen again by certain people who I'll obviously know who they are. But that's a stop run. That's a stop run. That's a stop run. Yeah. It's price movement up and down at highs and lows. Highs and lows are not exact. Sometimes they are called double tops. Price exhaustion. The way that I understand it, so let me give you some facts to start off with. Retail traders make up less than 5% of all activity in markets day by day. There's $7 trillion a day goes through the market in FX, right? 7 trillion. Retail trade makes up less than 5%. In fact, it's probably less than 3%. Yeah. Banks and institutions do not use stops. Do you think banks and institutions who move the markets up and down and make the markets could give a flying monkeys about 3% of the market that might have an order at a level possibly? No. Absolute rubbish. What is happening here is you have limit orders at the high triggering to drive the market down. You have buy orders approaching a level where it meets those limit orders in the market because there are sellers, market participants short from that position who will either have more order volume or less order volume than the total there. If there's 100 million shorts there and we approach that level with 70 million longs, it will bounce. If we approach that level with 170 million longs, it will pop. We will eat that 100 million, take one of those off and be left with 70 million, which will drive it through the high. Now there is no more sellers at this level because we've taken all the volume. We cannot buy anymore because there are no sellers there. We've got them all. So therefore, we have to call back and take profit on the move that we've just created, which means we create a new level. That's what happens. It's pure buy and sell volume. There is a mathematical equation going on in every tick on every chart at every price point, which is basically a balance of buyers and sellers. If there is more buyers at a price point than there is sellers, we will eat all of the sellers' orders unless any more come along, in which case we'll stay at that price point. And eventually when those sellers stop, we will have to go up a tick to find more sellers. There will be more sellers there. If the sellers come and join there and we run out of buyers at that level, we will tick down to find the next batch of buyers. This is how a market works. In a fruit stall, you have someone selling fruit. You have a queue of people lining up to buy fruit from this guy. When he has no fruit left, you will move to another fruit stall. Tick down. Yeah. If this guy's got tons and tons and tons of fruit and there's a load of people queuing up to buy his fruit and he sells half of his fruit to everybody buying up, he won't have any customers left. So he'll have to drop his prices to attract more customers, and then more people will come in because he's got lower prices than the guy next door. This is a market. That's a market. That's what a market is. eBay is a market. You sell your iPhone for $200 on the market. There's another guy selling an iPhone for $180. Your iPhone's not going to sell. When he sells his iPhone, you become the cheapest iPhone on the market and you get it. That ticks up. So the next guy comes along and goes, I'll sell my iPhone at 200 until someone comes along at 170, then that one goes first. It's a market. This is a market. There's no stop losses sitting there. There is yours. Yeah. So when the market gets there and takes out your stop loss, what do you think? The market's hit you. No, it hasn't. The market doesn't know you exist. Do yourself a favor and ask someone in a bank how this thing works. Get it from the horse's mouth. Don't get it from some bloke selling courses on YouTube. If you would make that bootcamp and sell it for 2,500, then you can move to the bench. Why bother with dealing with us numbers? Because I do this all day long. So I can either sit here and do this all day long and not talk to you, or I can sit here and do this all day long and talk to you. Either way, I'm sitting here doing this all day long. So I might as well do something with my time. That's the way I see it, basically. And it makes me accountable as well. How about if you do it in Udemy? Well, Udemy's only recorded courses, isn't it? there's no interaction in Udemy. I mean, the reason I don't see any benefit in selling a course is because on day one of the course being released, it will be pirated. Yeah. So if I put a course up on Udemy, you are the first person in that buys that course on Udemy. You screen record the course, and then you just give it away. What's the point? I don't understand why anybody thinks they can make money out of selling digital content these days. Yeah. Books. Brand new book comes out, hits the market. 12 hours later, it's available in PDF. What's the point? The value in learning anything is having somebody teach it to you, not somebody record a video and show it to you, because you can't ask that video any questions. That's where the value is in courses, I think, personally. I guess you would have to focus on two strategies. I don't focus. This is the thing, Marco. But I will give you, in the position trading bootcamp, I give 4 strategies out, 5 strategies. None of them are any good. Yeah. But they're all amazing. Take from that what you will. But all of them basically get you into the market. None of them are better than any other, because the strategy that gets you into the market there on that short, I teach, which is called the H1M5 mean reversion. On that particular occasion, it worked perfectly. If the market had gone up, it wouldn't have worked, because it only works if the market goes down. If the market goes up, it takes a second position, moves the price and waits for it to go down. So it will work eventually. Which is the best strategy to take? The H1 mean reversion, or should you have waited for the H4 M15, which didn't signal? Well, in that case, you should have waited for the H1. But if it had pushed up further, you should have waited for the H4. Strategy is a number of ticks that need to be lined up for you to press a binary button, long or short. Yeah. So the way I see it with the bootcamp, I teach people how to position trade. But the reason I give the buttons in the position trader EA is because you can do what the hell you like. Yeah. Look at my pound US dollar short here. Yeah. That short that I took here was the opposite of what I teach in the bootcamp. I decided to take a breakout with that button. It's got absolutely nothing to do with the strategies that I teach, whether you make money in this market or not. Right now, I took a trade in the opposite direction. Everybody that is traded in the bootcamp with the position trader EA on full autopilot will have pressed the long button there, or the EA would have got them into a long trade here. I'm gone short, right? So the people that did what the position trading bootcamp told them are now in profit. I am in drawdown, but it doesn't matter, does it? At some point, I'll be in profit, but the strategy is not making me any money. It's what happens after the button press. The strategy gets you into a trade with a 50-50 probability. Whether you make money or not in the market is how you handle that position and that drawdown. It's got nothing to do with the entry. The entry is 50-50. You can say short that, short that, short that. You also should have shorted that. Oops, that didn't work out. That didn't work out. That did. Wrong, wrong, wrong. Right, 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 right. This is why I use RSI, because most of the time it's right, but when it's wrong, it's wrong. But every single time you take a trade, the odds are the same. It will or it won't. There's no strategy that I can say this is the best strategy, because the strategy that is best is the one that is working with whatever the market does next, which you can't see because it's the future. So you cannot pick a strategy that works consistently. You pick a strategy methodology, a framework to put around price that works consistently. Position trading, breakouts in stock indices. Stock indices characteristically break out 3 out of 5 days. So if you have an edge that has a profitable long-term edge on something that works 3 out of 5 times, there's your edge. It's got nothing to do with whether you take a 5-minute break, a 10-minute break, a 15-minute break, or a 30-minute break. It's got to do with the break. It will or it won't. It's 50-50. Today, we have no break. We have a range. We have that D pattern that I talked about forming. It doesn't work. When you get that day, we don't make money. When you get that day, we make money. When you get that day, we make money. But we don't make money on that day. That day happens 2 out of 5. These days happen 3 out of 5. The edge is there. It's not on the 5-minute, the 10-minute, the 15-minute, or the pre-market range. And it's not whether it's 15%, 20%, or 10% of the average daily range, the range that you actually decide to trade. The edge is that when it goes, it goes. That's it. When we get an explosive move, the move moves. The market moves. That's the edge. The edge in position trading is not whether you use the 4-hour RSI, the hourly RSI, whether you use the 70 level, the 75, or the 80 level. The edge is that when the market has moved up, it comes down. I have no idea what the setting should be. I have no idea whether you should take a reversal alert, whether you should wait for a moving average cross, or whether you should take a 3-bar reversal entry. Sometimes they all work. Sometimes they all work. But what I know is that after it's pushed up, it always comes down. That's the edge. The edge is not the conditions of the strategy. You make your own strategy. You use a Bollinger Band. Use a Bollinger Band and a CCI with a bearish engulfing to take a short. That will work as a position trading strategy as well. I've never tested it, but I can tell you it will, because a Bollinger Band measures market movement. A bearish engulfing measures bearish signal. So when you've got a bullish movement followed by a bearish signal, there is a 50-50 chance that that will come down. If it doesn't, it's extended. If it's extended, it's going to struggle to get too much further. And if it does, you take additional trades. And at some point, it will become so extended that one of those bearish engulfings will cause it to pull back by 30 to 50% of the move. That's the edge, not the Bollinger Band, not the bearish engulfing, not the fact that you're using a 2 standard deviation or a 3 standard deviation Bollinger Band. That's irrelevant. These are just settings within an indicator that measures past price action, which has nothing to do with the future. Doesn't matter, does it? So I can teach you 1,000 strategies, but like I say, there is only 3: mean reversion, breakout, and trend. Bollinger Bands and RSI are mean reversion condition indicators. Signal indicators include bullish, bearish engulfings, moving average crosses, 3-bar reversals, and market reversal alerts. You get a condition matched with a signal, you press a button. What happens after that is down to the banks. It's got nothing to do with the Bollinger Band. It's got nothing to do with the CCI. It's got nothing to do with the RSI. I got a strategy here that somebody gave me the other day. Look, right? It's called the Wave 6. I've never heard of it. But the parts of it, and this is why it doesn't work, parts of it are, you need part 1, an impulse at the start. Part 2, a retracement that doesn't invalidate part 1. Part 3, a new impulse that breaks point 1. Part 4, a retracement without an entry, trap zone, death zone. Part 5, a break of point 3, trend confirmation. Part 6, subsequent pullback. They've basically described market movement up and down at random. This strategy has 6 moving parts that can go wrong. The more moving parts you have and the more complex movement you try and figure out to try and get into fair value gaps and order blocks and IFVGs and all this crap, just going to make it go wrong more often. Because what will happen is you will have, because it's so laser targeted, you will be like, why did you not work? You'll get crossed with the market. Market's just going up and down. It's doing what the banks want it to do. Because a load of people today said, I need to change a load of pound into dollars because I'm going on holiday to America. That's why it's going up. Because there's a shed load of people going on holiday. Summer, trends. Why do you think summer trends happen? A lot more conversions going on. Why do you think the stock market rallies on earnings? There's a hell of a lot more earnings going on. People are buying more stocks. It's nothing to do with point 1 breaks point 2 that pulls back by X% on point 3 without making a death trap before you get to, God, load of rubbish. Nothing to do with making money at all. Sorry, I'm waffling this morning, aren't I? I think mentoring is the right thing to do, but guess you would have to focus on 2 strategies. I just answered that one. Otherwise, it would be too much. You can do your own strategy. What I'd love to do is teach people to make their own strategies. Yeah, so You come up with a strategy like that, like this guy sent me this thing. You know, come up with this strategy and I'll say why it doesn't work. I'll tell you why it doesn't work. And it's also only works on the euro US dollar on the 5-minute time frame. Only. But apparently it's got a 70% strike rate over 2 months. Yeah. So first thing is 2 months is like less than a season, right? Come back to me with 2 years worth of data with exactly that statistically programmed into an EA that's taken every trade and not missed a thing, and then come back and tell me it's got a 70 strike rate. If it has, I'll snap your arm off. But I want it tested over 3 to 5 years. Second, it's got too many moving parts in it. You've got too many things that need to fall in line to make this work. The difference between something closing above and below a 20 moving average will have a difference between your broker's spread and all sorts of conditions that you will get a trade on and I won't. Yeah. So there's too much of that going on. Here, for example, this morning, someone got long here with their EA because their broker didn't gap. Someone got that this morning because their broker didn't gap. Mine did. So the difference between that strategy working and not working is your broker. Another variable. You can't have things working on 5-minute timeframes that are going to work on everybody's thing. So this is the sort of information that's more important to people than this is the strategy you need to follow. Everybody needs a strategy. So I give out strategies. But I give out strategies and then people say, what's the best setting? I don't know. Could be the 70 or the 80. I'm not sure this week because I can't see what's happened. I'll tell you on Friday whether you should have used a 70 or an 80 RSI. Is that all right? That's the reality, isn't it? I don't know. But if I tell you that the market moves up and down, you can find indicators which are oscillators, CCI, MACD, stochastic, RSI, Arun up down. There's millions of them. Pick something that oscillates that tells you that the market's gone up and down so that can give you a condition. Or let's just say, screw it, when it goes above ADR, when it goes above AWR, when it goes above the average monthly range, when it's pushed up for 3 days on the trot. All of these will give you the same thing. That's happened. The RSI, after 3 days up, will be extended to the upside. Look at a daily chart. Find 3 up days. Let's try and find 3 recent up days. So let's pick that one there. Yeah. And then go down to a lower time frame. Holy crap. Look, the RSI is extended. But you don't like it. You only want to use candlesticks. You don't want to use indicators. That's fine. Don't use that. Use 3 bars up. It's exactly the same thing. It's gone up. Doesn't matter what you use. You just need something to say. On a mean reversion strategy, you need something to say, wow, that was a big move. That's my signal. What says wow is up to you. CCI, MACD, stochastic, Bollinger Bands, RSI, 3-bar push. I don't know. There's 1,000 of them out there. There's 100 people out there that are selling indicators that basically draw an arrow on the chart because an RSI is extended, but they tell you it's the ABC 123 XYZ arrow indicator. What it does is every time it gets extended on RSI, it draws an arrow on the chart. So you go and buy it for $50 because it's not the RSI. It's the same thing. It's gone up. And then what you want to do is wait for it to go down a bit. So when it crosses below a moving average on a lower time frame, you take a short. When you get a reversal alert, which means that the last batch of bears that lost actually take control of the market, you get short. When there's a 3-bar reversal, the market pushes up, runs out of steam and then pulls back really fast, you get a short. When that's extended, there's your strategy. That's it. Pick one. Honestly, you do not need my strategies. That's what the bootcamp is teaching. It's like, this is what you can do. But none of it's right. What's the best setting to have on the reversal alert indicator? I don't know. What's the ultimate wick you should have on a 3-bar reversal bar 2? I don't know. That works sometimes. That works sometimes. That works sometimes. That works sometimes. Sometimes even a tiny wick to the upside works. But it's not the 3-bar reversal that works. It's what happens after that one. Nothing to do with the 3-bar reversal. It's what the banks do next. Every candlestick is a new balance of orders, which is why bullish and bearish engulfings don't work. When you get a bearish engulfing or a bullish engulfing, trying to find one. There you go. There's a bearish engulfing, railroad tracks really, but there's a bearish engulfing. Well, that's kind of railroad tracks as well. But that didn't work. That one, you know, shorted that now because it's a bearish engulfing. Will it work or not? Don't know. What's the volume of orders on this candlestick we've got now? If there's more bulls than bears, it will fail. If there's more bears than bulls, it will work. But it's got nothing to do with the candle that's closed because it's the history. Past. But it obviously means that there's more sellers in the last 4 hours than there was in the previous 4 hours. So if the sellers are going to remain in control today, then it will come down. But it's got nothing to do with the sellers of the last 4 hours, is it? It's got the sellers of this 4 hours. That's what decides the direction. That's random. Bank and institutional order flow. If this is coming down right now, right, and Microsoft phone Barclays and say, can you just execute $200 million into pounds for me, please? We've got a large order going through the UK market. And Barclays go, yeah, no problem. 200 million. We'll execute that over the next 8 hours for you. These next two candles are going to go boing, boing. Right? Why did they do that? Because Microsoft needed an order. Not because there was a bearish engulfing. Not because it was a failed bearish engulfing. Because Microsoft phoned Barclays. You can't predict that. Barclays can't predict that. Barclays will now execute 200 million long. If HSBC receive a phone call from Tesla for 400 million short, this is going to go 2 bear candles. But it's not because of the Microsoft order, it's because of the Tesla order. This has nothing to do with the future. So therefore, I can't give you a strategy. What I can tell you is what happens in the past. And it will repeat itself. That's all. That's all anyone can ever teach you. That's why doing courses is rubbish, pointless. If you do a course, it tells you the same thing. The market goes up and down. Every course that's ever taught, everybody's done them. You've all done a supply and demand course. You've all done a support resistance course. You've all done a price action course. You've all done a course about ICT stuff. You've all done a course about stop runs. You've all done a course about everything. Anybody profitable? What do they all teach you? Place an order that loses your money. What they all got in common? Market goes up and down and it hits order levels. If you place an order there to lose money, that's what all courses have in common. That's why I don't use them on position trading. Because all you're going to do is let the banks hoover your money up. Well, not the banks, just let the market hoover your money up. There's no one taking it. There's no one hunting it. It's just you are a number at a price level that is just going to get washed over. You are basically a microbe sitting on a grain of sand on the sea as the tide comes in. You ain't got a clue about anything. It's just going to wash you over. You're dead. Microbes don't breathe. But anyway, they can't die. I suppose they can die. I don't know. I don't do biology. I hope that helps. Anyway, it does help me. Exactly your decision making. You have a lot more experience than a lot of us combined. So right or wrong, we do it together. Yeah. People love to be part of a community, and that's the thing that that I learned a lot more being part of groups and being mentored as part of groups than anything, because you learn off the other people around you as well. Which is why I'm disappointed in the Discord group. It just gets nothing happens in Discord. Basically, all the Discord channels out there that are vibrant and lively are full of people arguing, because what happens is somebody says, I've got this strategy, it's going long. Someone says, I've got this strategy, it's going short. They both don't realize that they're buying each other's orders and only one of them's going to win. But all that's happening is basically they're arguing about strategy, and there's people pumping strategies everywhere, left, right, and center. I left them years ago. Forex factory forums and all that sort of stuff, because it's just full of toxicity. I was trying to create a group of sharing a common strategy, but people don't seem to want to do that. That's what I would love to do. But no one wants to share their trades or share what they're doing, because I think they're all scared of getting it wrong. There is no wrong, really. But I mean, if I say go short and spread your trades 3/4 of an ADR apart, people post up trades where they've gone short and they've got 5 positions before you get to 1 ADR or 6 positions. And I'm like, well, what are you doing? Well, just scaling into it. It's like, but you're far too close together. Why am I too close together? How long have you been trading? 3 days? Can't help. Watch the course. You've skipped over all the important parts. You went straight to the strategy. You're executing the strategy wrong because you didn't do the time. That's what I want, is people to be able to get in and get involved in talking about whatever strategy. I don't care what the strategy is. If it's based on the methodologies that I teach and not something else, that's fine. If it's about position trading in the position trading group, do it how you like. But other than that, people just want to share this sort of stuff because some bloke on YouTube showed them a P&L for the last 2 weeks of 70% winning trades. So this is, as far as they're concerned, the holy grail. They've got no hope of executing this. So the reason I got sent this is someone wanted me to automate it for them. It's too complicated. It's just too complicated. You could probably do it, but there's too much maths in it. Go and look it up if you want, but I've no idea where it came from. Random one, you can't remove the lines in the new trade portfolio dashboard. Not even changing the color works. I never anticipated anybody wanting to remove the lines. Nope, you can't. You're right. No, you can't. You're right. I never thought anybody would want to remove separators because the reason I put the separators in because it looks an absolute mess if you don't have them. So, yeah, you're quite right. I could look at possibly doing that, but you're the first person that's ever said they don't want them. So, yeah, I don't know. Don't know on that one. That might be a logic issue in the EA, but I mean, there's no. I've never really needed to remove them. So, morning, Plowman. Okay, could be FX is different. There was an analyst on Bloomberg the other day who said so far this year, very little sign of institutional buying in the stocks recovery, mostly propped up by retail. Yeah, right. So there's two types of retail. Yeah. Banks are not retail. Institutions think Axe Capital in billions are retail. Yeah. So a large fund capital management company is a retail trader. Yeah. Not the guy sitting at home. Yeah. So there's different types of retail. So don't get confused between the two. We class retail traders as people that deal with brokers. Yeah. And there's a lot of us. There's a lot of volume that goes through us. Yeah. But think about what I just said about the money that goes through this market. We make up an estimated 5% of a $7 trillion. I don't even know how to do the maths on that. How many 7 trillion? 7, 1, 2, 3, 4, 5, 6, 7? That's 70 million. 7 trillion, yeah? Oh. No. I can't use maths either. 7 trillion times 5%. Yeah, so don't get me wrong. We're still putting $350 million through the market every day. Still a chunk of money, isn't it? Yeah. but that's us littlers sitting at home. Any corporate is still classed as retail. So a corporate client that puts brokers are corporate clients, but they are retail. They are retail to banks, to market makers. The way they differentiate is a market maker, right? A liquidity provider, yeah, is a corporate. A retail client for a corporate is a broker. A retail trader is you and me. Yeah. These are retail clients for bank and institution liquidity providers. Yeah. So, and brokers have retail traders and they'll have corporates going through them as well. So you'll have pension funds and hedge funds that use brokers to execute orders. So it's a complex thing, but at the end of the day, you don't need to worry about it. Sorry, my lights just went off again. That means I've been on too long. They're on a 2-hour timer. Joined late. Morning, Rajiv. I think the hardest thing is to trade small and let the account grow. Everyone wants quick wins. Yeah. You can get quick wins, but quick wins also are quick losses. Look at the last week. Down day, up day, down day, up day, down day so far. Might be a bigger down day today. We might make another 1,500 loss this afternoon. Which would be unfortunate, but quick wins are done on low time frames. Now we're going. Look at that. Stop me out in propulsion. Yeah. Something's just happened. It's probably just the 10 o'clock candle volume. Yeah, that's just 10 o'clock candle. Hourly candle close. Coming back to my statement on strategy, I believe you misunderstood. I believe we all know that your system is just like a system is not working all the time. But when I say we need a mentorship and 2 strategies, I mean work on 2 consistent methodologies that are applied on the same markets day in, day out. It is the consistency that provides guidance and structure. Yeah. So it is also on 2 time frames. We cannot please everyone. I know your methodologies over long run work, but it's the paradox of choice that we all have. So basically, like I said, there's 3 strategies. So this is a breakout strategy. This is my breakout strategy. I like to play breakouts on volume, which is suited to stock markets. You can do a breakout strategy on any FX pair. It's just you can't tell how it's going, when it's going to go. Mean reversion, I prefer to do in swing. So I will teach, and I can only teach mean reversion, breakout, and trend. I don't like trend strategies. I don't trade any trend strategy at all because every trend strategy I've tried has a long-term edge, but is incredibly inconsistent. Trend-based strategies need very strict risk management and adjusted risk management to make them work. So if you look at something like the shadow, yeah, the entry into this trend for most people will be somewhere around here. The move started here. Yeah, this is why I love mean reversion. But that you need to adjust risk on it because you're going to get stopped out 70% of the time on a trend strategy because 80% of the time the market is range bound, which will be moving up and down, stopping you out. So I'm no good at this. So I don't trade it. Well, I can teach you how it works, but I've got loads of EAs I've built and they all work long term, but they have months where they don't make money. So if you look at something like the pound US dollar on a daily chart, yeah, let's call it that one. 1, 2, 3, 4, 5, 7/8, 9 months. Didn't work. No one made money. No, there's not a trader on the planet that's a trend trader made money for 9 months. Killed it. But did you get back that 9-month loss here? Because you were trying to get into some trends. It broke out of highs. It broke out of lows. You were trying to get into some trends. So you probably stopped out 2, maybe 3 times there. So that would have probably paid for those stop outs, which gives you what at the end of the year? You know, and you short term, 5-minute trends, beautiful. But 5-minute time frames are choppy. 15-minute time frames are choppy. The best trending strategy I would ever teach anyone is a Fibonacci pullback, which is what this strategy is based on. But what they've done in this strategy is they've taken something very simple, Fibonacci, and added 1,000 filters to it to make it incredibly complicated to find a trade. So you get a 60-70% pullback on a move in this strategy, right? And you can take it, but only if it's the second one, only if it's got an FVG, an IFVG, or something else. If it's not in the death zone, wherever that is, which is obviously a market trap because they know you exist. They're trapping you after you. They're after you. And then your target is the low. And you use an 80% Fibonacci pullback as a stop loss. Right? So in a typical month on a 5-minute chart on the Euro US dollar, you'll get somewhere between 6 to 8 trades, which means that 2/3 of the month, you don't do anything. Yes, it might have a high strike rate, but because the person that's built this strategy has taken Fibonacci and he has curve fit every pullback for the last X months, and he's curve fit rate. So all the ones that pulled back to 50% and worked on that very first leg didn't trade them because those are the ones that worked better. They still worked. But some of those, if you'd have got in there and put your little stop loss there, you've actually got 3 legs out of them and made a 15R, but he only targets 2R. And there's always, with all of these strategies, a discretionary part. So they teach you the strategy and you go, this doesn't work. You go, but what you should have done is set your target at 1 to 2. But you told me to set my target at 1 to 3 and move to break even, and 1 to 4 if it was an extremely favorable move. But that wasn't a favorable move, was it? What do you class as a favorable move? Something that's bigger than that. He just paid 1,500 quid for that course. He's made a rule up. If it reaches 75%, move to break even, but only if it is in leg 2 without a death zone after you've hit an IFVG that's turned orange. None of it works. All rubbish. Far too complicated. But what that is a trend pullback strategy. It's a mean reversion pullback. Yeah. So where he goes like that, I am going like that. But if you are a trend trader, you are looking for that. Best trend trading strategies are very simple. That. You pull back. So if you think that is the start of a new trend on the 15-minute chart, look for the propulsion gap and sell it somewhere around there. Stick a stop above the high and target the low. 90% of the time, you'll get a 1.5R. If it trends, which it will do 30% of the time, you'll win. That's literally trend trading. I just don't like it because it doesn't work as often. Because all of the pullbacks, the rules are too complicated for it. Should it be a 50, a 61.8, a 71.9? Where should you put your stop? If you get in at the 50, do you put it at the 71.9 or do you put it at the 80? If you get in at the, where do you put your stop? Do you make it twice as big if it's there, and therefore do you have to go for a low, or what if it bounces? Do you get out? Do you break it? There's a billion rules. Too complicated. That's why it doesn't work, because you change your rule every time. I am the GOAT. How's the 007 doing? I haven't got any further with it, Momo. I haven't managed to. I've sidetracked. Do you know why I've been sidetracked? Because this thing's just killing it in the minute, and I haven't bothered with it. And now the Trump moves are over, I'm kind of I've got to test it on un-Trump times and I haven't got anywhere with it. It's going to be one of my projects that sits there, and when I have spare time, I'll pick it up. Morning, Pontevedra. Sorry, Blue Trader from Pontevedra. Summer is coming. Summer's here. It's hot in the UK. On the other hand, a good week for me, but today I didn't trade because I didn't see anything to trade. DAX. Near R2. There you go. So look, Blue Trader is trading the R2. Yeah. So if you're trading support, resistance, pivots, don't trade. 50-50 chance of it working out. I don't know where R2 is. Usually in the back of an X-wing, but today apparently he's near the DAX. Clearly, my only issue in trading are line colors. Must be going well for me, yeah. This is the problem with working with when stuff works, right? This is the issue, isn't it? When you start making money, I've really screwed my dashboard up now. Gainsborough, where are you, Gainsborough? That's dark grey. Gainsborough. No, that's Thistle. I can never find Gainsborough. There he is. When stuff works, it is really easy, isn't it? Yeah. So you start doing other things. You start wandering. And this is the danger with trading. When you have a system or strategy you find that works for you, it never works to your expectation. So what you do in your downtime while you're making money with that is you hop to another strategy, which screws up your original strategy because you think, what if I did that with that one? Oh, no. Okay. Yeah. And time is an absolute killer in this industry, which is why I spend all of my time doing research and analysis. When I'm down in downtime, I'm either working on my strategies and doing additional testing, or I'm working on other strategies to try and find variations. But it keeps me occupied so that I leave these alone because they've worked. They've been working for 6 years, so I don't change it. But it's dangerous when you start making money because what you end up doing is wanting to make more money. It's a greed thing. The only way you make more money is by increasing capital. That's the way you make money. Money makes money. Morning, Lee. What are your thoughts on trading soft commodities? Soft commodities, I've never traded them. By soft commodities, I presume you mean pork bellies and stuff? Oranges? I don't trade them. It doesn't matter what you trade. Everything moves up and down. So if you pick gold, moves up and down. Forex moves up and down. Oil's very soft, isn't it? Like grain and wheat, yeah, moves up and down. Indices move up and down, more up than down, but they move up and down. Futures move up and down. Everything moves up and down. Back test. R2, calculate the vector for me. Has R2 calculate the vector for me? Try to get some more power of the engine of my X-Wing. Yeah, see, that's what R2 does, as far as I'm concerned. But obviously there are, this is the thing. Pivots. What are pivots? Again, somebody contacted me, again, about currency strength. And they were looking at currency strength meters. And I said to them, all a currency strength meter is doing is telling you when something's gone up and down. Your chart tells you when something's gone up and down. Your RSI tells you when something's gone up and down. ADR tells you when something's gone up and down. A pivot tells you when something's gone up. R2 tells you when it's gone up to R2 pivot. S2 tells you when it's gone down to S2 pivot, support and resistance. It's all the same thing. If it's done X, your job is to decide whether to do Y or not. You have a 50-50 shot of doing that or that. Doesn't matter what you use. Use pivots. Pivots are great. I used to use pivots. I had a strategy based on pivots. ADRs are pivots. They're dynamic pivots, which is why I prefer them. But they are pivots. On average, 42% of the time, price does not exceed that level, which means 58% of the time, we're not going to get there. But when we do get there, the chances of it going beyond that level are 23%. It's a pivot. If that lines up with a previous high after exhaustion, there's a high probability of that. It's a dynamic pivot, but you can calculate pivots on anything. A pivot point is a place where we are predicting in the future price will pivot. Whether it pivots or not is based on the volume of orders at that price point, nothing more. If you get to ADR and CPI comes out 5 minutes after you hit ADR and it's negative by 0.5%, you're going to be 300% ADR. That's got bugger all to do with anything, is it? The reason that's done that is because of CPI. It's got nothing to do with that. This is an average. A moving average is an average. This just tells you in the past what has happened. It doesn't tell you what's happening today. But you have to have measurement tools to be able to measure movement. So that's what ADR is for. Pivots are also dynamic because they're calculated depending on which pivot you use. There's loads of them, but they're calculated based on historical daily price action. So, they're all the same stuff, but you could formulate a strategy around pivots. You can formulate a strategy around ADR. I've just shown you this morning at the beginning of the stream a brilliant strategy formulated around AWR. Every single one of these today, if you'd have taken them this week, you'd have not only made profit once, but on a lot of them, you've made profit twice this week. Fantastic. This week. Next week? No idea. I got a lot of value by just listening to you in the background. Cool. Right, I'm going to go now. I'm back this afternoon at 2:30. So, load of rubbish this morning. In fact, they are probably watching, aren't they? Because I got in there, they stopped me out there before they ran away. They got me in there, they came up, stopped me out there before they pulled back. I went along there, they came down, they stopped me out there before they did that. So they're obviously watching retail traders and hunting their stops, because obviously that's why I got stopped out. Nothing to do with the fact that I'm measuring average price movement and it moved on average today. I'm not looking for averages, I'm looking for breakouts. So, anyway, 973 down for the morning. So we'll look at it this afternoon. Have a look at what the DAX, the NASDAQ, S&P and the Dow are up to, and see if we can recoup those losses this afternoon. Other than that, wise, today you've got no news apart from UOM. So we've got 3 o'clock University of Michigan. There is a chance the market might stagnate for the first half hour. If that's the case, we might take a couple of stop outs on the US session. But the 30-minute breaks will happen at 3 o'clock. So if we're going to break today, there's a good chance of making some good money this afternoon. So we'll see. But it's Friday afternoon anyway. We're mid-month, so there's not going to be any massive volume at end of the month going through. So see what happens. But all good. I'm not taking any more trades today. That Swiss yen I've just got into. The rest of this stuff I'm just stuck sideways in at the minute. So it's just a case of as long as we're going sideways, I'm going nowhere. We'll see what happens. Right, so I'll be back this afternoon, 2:30. Other than that, back next week as usual. If you need anything, I'll be in Discord or Telegram. Other than that, have a good day, and I'll see you later, if not next week.